happening? What's happening, everybody? I Jolly Pies for my lateness. Uh, Anybody that's still pulling up, I appreciate you for pulling up. And while we waiting to see who all pull up, let me do this real quick. Let me do this real quick. Again. For everybody that's pulling up. I appreciate y'all for pulling up. I'll put my phone over here so I can see what's going on when people be trying to call me and text me and say stuff. Put it in my viewpoint. Um, Today's tardiness is sponsored by. Hey, Dad, we going to the mall at 3:00, and it's also sponsored in part by. Oh, I thought you went live at 3:30. And then me taking a nap, me saying, okay, we're going to have to leave early. So we'll leave about 2:15, 2:25, so I can take you to the mall. I can get back and go do my live. I wake up at 2:30 from my nap. Like, you ready? Oh, yeah, I'm getting ready now. Hey, man. What's going on, everybody, man? For everybody who still pulling up, I appreciate y'all for pulling up. I know we supposed to do this at 3:00, but hey, we here now. Better late than never. You hear me? Hey, if this is your first time tuning in to Tim's Tidbit, I like to say welcome. If it's not your first time tuning in to Tim's Tidbit, I still want to say welcome and give you a nice hearty well, thank you for always hanging out with me and my homeboy Spidey back here hanging by the window. What's going on, man? If you don't know who I am, before I get to that right there, this is the weekend chart prep for December the 12th. Is that the right date? Yes, for December the 11th. I said December the 12th, 12/11. I'm looking at the 12 and saying December the 12th. But December the 11th, 2022. Yeah. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day, except for Saturday, even though we did get on yesterday. So if y'all want to just see me do my weekly price action review, like how I go through the charts and just break down how I, saying, like I usually do it like a lot more intricate than I did yesterday, but because I was trying to talk through it and had a few people pull up on the live, I was trying to make it, as short as possible. Y'all even sat through and watched me fall asleep looking at the charts like I always do. People like, get some rest, Tim. This is what I do. I told y'all, if y'all want to come look over my shoulder, this is what I do. I get in front of the charts. I be going through the price action. I doze off. I see sometimes, like if I wouldn't have been on live with y'all, I probably would have started slobbing. But then I realized, man, I'm sitting there. I'm like this right here. I'm talking. I'm like, Tim, in my head, this in my head now. Tim, you on live. Open up your eyes. Open up your eyes. I'm like, I ain't gonna hold y'all. I just fell asleep. You know what I'm saying? I just sit here and I be dozing off. You hear me? Hey, man, I do this for free 99. I don't charge nobody nothing. I just ask that you hit the like button. Speaking of charge, right? Because people still be asking me about one-on-ones, right? The link is in the chat. The link is in the chat. What that link is for if you got any questions, pull up and ask a question. If I got the answer, I share it with you. If one of the gang got the answer, they'll share it with you. You know what I'm saying? Pull up and ask a question. But you in the back, the new guy. I know Robinson already here because I showed up late around the time he usually get here. So move out the way, Robinson. Yeah, you the new guy. No, yeah, bring the new female with you too. I want everybody to hear this secret. If the feds find this out, I get in trouble. You see this link right here, right there, that link right there. If you click on that link, that's your key to get in a free one-on-one right there. If you click that link, You can come up. I'll pull you up on the stage. You can turn your camera off if you're shy. You don't want people to see you. Matter of fact, the other Spider Gang, they will go in a different room. They won't listen to nothing you ask me, right? If you click that link, you can pull up, ask any question you want about anything you want, right? And dealing with the stock market, that is. And I will answer every question that I know for free while we're on live right there. That link expires when this live is over. So take advantage. Now, let's go see who in the chat, man. What's going on, Rich Genius? What's up, Captain Kirk? I told y'all he was here. What's going on, Robinson? What's up, Shell? KC, did you bring the sunshine band with you? I'm your boogie man. That's what I am. Hey, I just chipped my nail. What's going on, Andre Love? Hey, my sweetie in here. Hey, baby, how you doing? I thought you was working. Quit blaming the kids. You know you were asleep. I already told you I was asleep. I woke up. I woke up in time to come on live. What's up, Steven? Oh, yeah. I remember you, Steven, because you got that. Get off my screen with that tiger paw on your avatar. Hey, man. Them all the names I see in the chat, so that's all I'm shouting out. Let me share my screen real quick, and then we're going to get into it, man. Get on the screen. If you go to the link in the chat, the link in the description, we got several playlists on here. This is the most important one right here. Y'all know how I am about my son and his music. Support my son music. Click on that link right there and stream my son music. Support my son music. He's a good kid. I was even running late taking him to the mall today. Watch gems from the live stream. That's the playlist where if I go deep into depth on something, you be like, man, this is a gem. I want to come back and rewatch this. While we're on the live, say, hey, Tim, can you clip that piece up where you was talking about so-and-so and such, and I will put it in here. That way you ain't got to come try to scroll through a whole hour and a half live trying to figure out where the gem is. And all, like a bunch of other gems in there already. I'm not going to click the link. Go see for yourself. Watch ICT Concepts, the Lingo playlist. This is the playlist where I break down the lingo you'll need to understand to be able to trade certain ICT concepts, right? ICT Concepts explain the price action. Y'all heard that playlist. And this is part 2. This is a 3-part series. This is part 2. In this playlist, I walk you through how I look for the PD arrays in the price action, the same PD arrays that we defined in the lingo playlist, right? If you go to any one of the videos in any one of these playlists and go into the description, right? Any one of these, right? And go into the description, it can be part 1, it can be part 2, and then go into the description, you'll see a link that says download slides. If you click on, you'll also see a link that says, y'all see what the second link said? Y'all see what that second link said? Support my son music. So do that. Support my son music. Okay, if you click on that download slides, it takes you to a folder where there's you know what I'm about to do? Y'all hold on for a second. I just thought about this. Go to my drive. I got a copy of it right here. Where's the move to? ICT Concepts. Move here. This item is visible to everyone. Yes. Okay, so now back to what I was saying. If you click on that link that says download slides, right? And then if you see, I just put this copy of weekly calculator in the weekly gold calculator. We was having some issues with it last time. I think on Google Drive, I think I have to put it in a folder and then share that folder with y'all so that you can download it. Because a few people was trying to download this weekly gold calculator and it was giving them issues downloading it because it wasn't in a folder. But when I put it into a folder, people was like, hey, that worked, right? So now, what these are the slides for all the ICT concepts. And then I just put that weekly goal calculator in there. Let me rename this so it'll be at the bottom. This real time. Y'all know how I get. I can't it got to be in order. There you go. All right, these are the slides for the ICT concepts, all of the videos, right? See video 1 through 16. It's 15 sets of slides. There's no slides for video 9 because I didn't use any slides in video 9, right? So these are all the slides, all 15 sets down here at the bottom. The ICT top-down analysis, what that is, that's the PIM-dash chart. If you download this right here, that's the PIM-dash chart. These are all the PD arrays that I discuss in the different video series, right? The way you use the PIM-dash chart, if you are bearish and you want to sell at equilibrium, you understand what equilibrium is. I'm not going to get into that right now. If you're at equilibrium and you bearish, you wait for price to move up to your PD array style that you trade. If you a breaker trader at equilibrium, you wait to price move up to your breaker that you eyeballing, and then you sell at that breaker. If you're bullish, you look for price to go down to your breaker that you're eyeballing, and then you buy from when you're from equilibrium right there, right? That's how you use it. If price is in a premium and you're bullish, you wait for price to fall to the discount, and then you buy it if you're a fair value gap trader, right? If price is in a discount and you're bearish, you wait for price to rise up and you sell it at your fair value gap if you're a fair value gap trader. That's how you use the ICT PIM-dash chart. I call it PIM-dash because it's the order of operations, right? Look at ICT concepts to figure out what I'm talking about, but that's how you use it. And then this weekly goal calculator right here, I put it in the same folder. That way, if you ever click on a link, everything that you want to download from watching the stuff that I do is all in the same folder. Now you ain't got to worry about figuring out which link it is, which link that he put that in, which link he put that. It's all in the same folder. It just say download slides. And I'm tired of talking about that. You hear me? Now let's get into it. Who in the chat? I already said who was in the chat, didn't it? Oh, Michelle pulled up. Michelle Tucker, what's going on, Michelle? How you doing? What's up, Zay? Hey, if y'all ain't see my homie Zay, he posted another video earlier today. I ain't gonna hold you. I was watching Zay video and the old man kicked in. I got to go back and rewatch it. I woke up and the master investor was on. I said, whoa, wait a minute. Delete, rewind. Where Zay went? Put it back on Zay. I'm gonna go back and finish that up after I get off live. What's up, here to learn and share? You just pulled up. You acting like Robinson now. I ain't gonna send you to the principal's office because I was, you know what I'm saying, I was on my super dad duties today. Let's go ahead and get to it, man. I said we was gonna get to it. I hadn't forgot that we hadn't went to the chat already. We're gonna go over here and we're gonna go straight to the ES chart. We're gonna go straight, we're gonna mark up the ES chart. We not gonna mess with Spilene today. I'm sorry, little kids. I know the little kids be liking when Uncle Tim sang the Spilene song. People hear me, will be like, "Oh, my son like when you be singing that." ES. All right. Let's go ahead and we're gonna go ahead and hide all this and then just redo everything on the ES. Now, the contract switched over on Friday. That's what that little twirly swirly thing mean down here. That little twirly swirly thing mean that we switched over to the March delivery contract. So we're now on the H contract, right? And then if you see this daily candle from Thursday and Friday, right? There was like a $30-something difference between the price of the March contract, the March delivery contract, and the December delivery contract, right? So these candles are a little weird. Ninja Trader, when it updates the contract, it adjusts like the previous candles. The previous candles adjust to the new contract price, right? But TradingView, it don't adjust the previous candles, right? It don't adjust, at least for me, it don't. It don't adjust the previous candles I guess they want you to go back to see what the real price was on that date, right? So the reason why I'm saying that is on the continuous contract, these two candles right here, they tell a very different story than the March delivery contract. So looking at the March delivery, I mean the December delivery contract, right? If we go just to December by itself, look at these two candles right here, Thursday and Friday. These two candles right now, watch how different they look. You see how they look? It's a total different story, right? This candle, this on the December contract says TradingView don't price adjust the prior contracts. I mean the prior candles, previous candles to the switch over date. Y'all know what I'm trying to say. Then it looks like we had a huge gap up, right? Because we closed at 39.65.75 on Thursday, right? Why my calculator thing look weird? And then we opened up at 39.96.25. 39.96.25 minus close at 39.65.75 minus 39.65.75. A $30.50 difference. Remember, I told you it was like a $31 difference, something like that. Because we had did the math already when the homie Zay pulled up and was saying PDub said something about the difference. And I'm like, what am I missing? I don't watch the difference. I mean, I don't watch the change, but you know, it's like a $30-some difference. And PDub was like, you know, that's the biggest difference he's ever seen, right? Which is true. It used to be like sometimes be like a $10 difference, a $12 difference, $7 difference, $8 difference. You know what I'm saying? I ain't never seen a $30 difference in that. That's true. It didn't strike me as odd until Peter pointed it out. But yeah, so as a it looked like we gapped up $30, sold back down, you know what I'm saying, and went up and sold down. When in actuality, all we did was just open pretty much where we closed at, pushed up into, finished up this daily fair value gap, and then sold back down and closed toward the low of the day. You know what I'm saying? That's pretty much all we did. We opened in the same spot, pushed up, closed the gap, and then sold down and closed at the low of the day. Actually toward the low of the week, sort of. Like this was the weekly low right over here. We closed at like the low of the week, right? But when you look at the continuous contract, it make it look like we didn't close near the low of the week, and it make it look like we went way up past that daily fair value gap that we was watching. So I just want to point that out to keep that in mind. Right, the PD array is gonna be a little weird looking at the continuous contract from December 8th forward. Once we get further on down the road, then we'll forget all about this right here, and it'll just be a blip on the radar. That's it. So with that being said, we're gonna look at the continuous contract to figure out where we went. We're gonna go back. We're gonna go way back. So we're gonna look at the continuous contract to figure out where we've been up until now, and then we're gonna do all the marking up on the March delivery contract for this week. So shall we begin? Before we begin, do anybody got any up? Zayden put a whole dissertation in the chat. What's that note? I looked for you a couple times and you weren't on. Oh, I already know you was looking. I know you was looking. What's up, Kareem? What you talking about, Zay? Let me get my glasses. This is why I tell people who don't trade futures to use the US 500 and SPX. US 500 to watch overnight trading and SPX for cash session trading only. Thank you for the input. And the homies, they say use the US 500 and the SPX. The US 500 and the SPX. The US 500, it trades pretty much in line with the ES, right? You see, I just switched over. I switched over. Y'all seen it when it jumped, right? See the little jump like that? That's the ES. That's US 500. That's the ES. That's US 500. So they trade, you know what I'm saying? That the prices are different. You You know what I'm saying? The prices are different, but they trade, you know what I'm saying, pretty much like tick for tick, tat for tat. You know what I'm saying? The price is just a little bit different. We got 39, 28, 60, and over here we got 39, 68, 25, right? But they pretty much tick for tick. And the US 5, I think the US 500 not delayed on TradingView either. It's not delayed on TradingView. If you want to look at the US 500, it's not delayed. But if you doing it for free on TradingView, the ES, all the futures like the ES, the NASDAQ, the YM, they all delayed. Even the SPX be delayed too. The SPX be delayed too. I found that out the other day when we was looking at the SPX chart. Now the SPY don't be delayed. The US 500 don't be delayed, right? And it's crazy why it be delayed, because it's not like these right here got a D next to it, right? So I expect them to be delayed. But when I was looking at the SPX the other day when we was talking about this, oh, it was delayed. Because I'm like, man, why is this off? It was delayed on the free version. But anyway, I went down a rabbit hole on that. Thank you, Zay. Thank you, Zay. What we have done, I like to go back to the monthly. I mean, you can do it the way you want to do it. This just how Lil Timmy Rogers do it. Get that off my screen. Looking like Zay with the side open, right? So everybody know where we came from. Everybody know this the pandemic low. Man, it's the pandemic drop, should I say? Started pushing up. This was like the confirmation move off the pandemic bull rally. We started rallying. This was the confirmation move where we pulled back, set a 2-month order block. Them 2 months right there. Set that order block right there. If you don't know what I'm talking about, I'll mark it out for the people who don't understand what I'm saying. These 2 down close candles right here, that right there is an order block. What makes that an order block? We came up to an area of previous resistance right here, this old high, right? The 2020 high. We came up to an area of resistance, right? Right. We were met with contrarian price action. We were moving bullishly, met contrarian price action. Y'all see how I'm using the big words? I'm using the official words, right? And then we had heavy distribution again, and we broke through the high of this contrarian price action, making this a order block. And it's 2 consecutive down candles. So you take into account the bodies of the consecutive down candles, right? And looking at that right there, you see that old previous high. I just noticed this. The old previous high is pretty much at the equilibrium of that. The mean threshold of that order block, that monthly order block right there, right? So we traded up bull rally, bull rally, bull rally. Now, the bull market, bull market, bull market. Now we came in 2022 and we're in a bear market, bear market, bear market, bear market, right? We got all the way down into the wicks of this order block, right? And as y'all know, the most sensitive area per ICT teachings, he always teach, right? The most sensitive areas of the PD arrays, like the order blocks and the breakers and all that, from the highest body to the wick, right, is a real sensitive area. You expect price to start showing some type of reaction in that area, right? But you're giving it all the way down to the mean threshold of that order block to prove that it's going to do its job, and the price. Y'all ain't heard that one in a long time, right? So we got down into the wick of both down closed candles, right? And then we had a reaction off of it. Boom. Then we started this most recent bear market rally, right? We started the most recent bear market rally. On this last bear market rally, right, we ended up getting 2 up months this time. We had a little consolidation. I ain't gonna consider this no bear market rally. I don't think we was in a bear market yet around this time, right? We came down, had a consolidation, got into bear market, had a little bear market rally. We only had 1 up month that time, sold off again. Then this time we had 2 up months, right? And now that brings us right to December, where we are now. This, like, we had an up month in October, up month in November. That brings us to December. Now, let's see if there's anything we want to mark out on our what's the name on the monthly. Oh, and one other thing that I want to point out right here in this area before we go, for anybody who don't know, we pointed this out a while ago. We pointed this out a while, and I can't remember when we pointed this out, but I'll point it out again since we're here and I'm thinking about it, right? Another thing that I learned from ICT teachings, right? Whenever you trade down through up close candle, right? You're coming down. The market is selling off, is bearish, right? And you trade down through a up close candle, like the month of July right here. So in September, right, we traded down through the July candle, right? So once you trade through that candle right there, you coming from a market there. Mark the bottom of that candle, what an open. In this case, the open of that candle, right? And then you start to look to the left, everything you're watching over there to the left, you look to the left, right? And you want to come and find the first down close candle, right? With a price that's below the candle that you just traded through, right? So when you come to the left, right? You're looking at this right here. You keep coming, right? Keep coming. So this is the one you traded through. This is where price is. So you want one with a low, or where the candle high is lower than where you traded through and under price, right? So you come to the left, everything you're watching over there to the left. And where does that bring you? Aha, right there to that order block, right? And then where's the most sensitive area that we was talking about? From the bodies to the highest wick. And when we come over there, where did we go? Where did we go? We went right there to that. Get on there, right? Let me get my thing there. Clickety click. Boom. Where do we go? Right there to that little sensitive area, the body to the highest wick. And then we got the reaction and we traded back up to the candle that we just traded through. Now, it's seeming that we're trying to get into maybe a reversal to turn back around. And I say maybe because we still don't know yet. The algo still haven't given us that on the monthly time frame by giving us a break in market structure to the upside on the monthly time frame. Once we get above the August high, right, on the monthly time frame, then that'll be the algo showing us, hey, I really want to go up. I've given you a break in market structure, right? So if we get a break in market structure with December and we close above this right here, that'll be this is what Lil Timmy Rogers saying. That'll be the algo saying, I'm ready to go up now. Not meaning we're going to just blast off the new highs tomorrow, but that's the algo's tip of, I'm ready to go that way now. If we go up here and get a wick above this high and come back down and close inside the August high or beneath the August high, that'll be the algo saying, I want to go up, just not right now. I got something down here I got to finish first, and then I want to go up, right? What y'all laughing at over here? I don't know. I'm going to close the chat so I don't get distracted. Now, so just wanted to point that out because we pointed that out before. Once we traded down through that August candle, come to the left and look for the first down close candle that's below price and below this here, and you can expect the reaction off of that candle and then trade back up to the candle that you traded through. And it's the same thing as when you trade up past a down close candle, you do the same thing. It's the same way. You just look for an up close candle, right? Expect it to go up to that candle and pull back down, right? Once you trade past that right there, right? Now I'll probably be looking to see if there's anything I want to mark out on the monthly, and it's not, because we almost at the top of this order block right here. We're almost at the top of this monthly order block, so I'm not going to even waste the time of marking it out. So For the monthly, I'm going to mark the monthly high on September still, right? Because this is where price is, and I'm marking it on September still on the monthly high, right? And then for the monthly low, since our old one was down here, I'm just not going to move I'm not going to move the bottom of the box yet because we haven't broken out the top of the box. So we're going to leave the box where we had it, right? On September and October, right? We're going to leave the box where we had it on September, October, because we still haven't broken out of the box yet. We still haven't broken out the top of the box. So God dog it. Come on. So September template monthly box top in October. Monthly box bottom. All right, monthly box bottom. Okay. All right, let's go to weekly. I'm gonna leave that open for a little while so I can jump back and forth. I'm gonna look like Z chart for a minute. That be driving me crazy when that thing be open on the side over there. I be like, close the thing so we can see more of the chart. Weekly. Let's look at the weekly candles, right? So on the weekly, we're not gonna go back as far as we went back on the monthly. On the weekly, we're coming down. Oh, we didn't even check the IPDA. We didn't even check the IPDA. We checked it last week, so. And we ain't do a whole bunch of nothing, so we ain't got to check it now. Because we checked it. I think we checked the IPDA last week. And we ain't do nothing really, so ain't no need to check the IPDA again. All right, so in August, we came down and made new low. We made a new yearly low starting from August to October. So from August 15th to October 10th, right? We started selling down and made a new yearly low on the weekly charts, every chart for real. And then we started trading back up off of that yearly low after taking out sell side liquidity, right? Going back down to the same area we talked about. We started trading back up, set an order block here on the week. They do the end of the week or the beginning. Monday, so the week starting October, the week starting with Halloween, we set an order block for that week, right? And then we came right back down. This week we came down into the wick of that order block, right? We came into the wick of that order block, and we have set some equal lows right there. We set some equal lows right there. And that's our weekly low right now. So that's going to be our weekly low. And keep in mind that that's an equal low before coming into the body of this order block. We came back down into the wick and set an equal low. Is that wick for wick? The low 39.12.50 and the low is 39.14. So it's not wick for wick, but they relative equal lows. That's going to be our weekly low that we mark out for this week. And I just want to see if there's anything else we're going to mark out. Yep. Yes, it is. So we'll mark out this order block right here. We got a weekly order block right there. And that is a bullish order block on the weekly. Bullish order block on the weekly. Right? Stretch these out a little bit just to give myself some little playing room. We have a bearish order block above it. Right there. We got a weekly bearish order block right here. This is a very interesting place for price to be, just based off these two order blocks. Right there. This is very interesting because price is here, resting just above a bullish order block, and is below a bearish order block. This is a very interesting place for price to be sitting, because right now we're in a discount on the week, right? So it'll be easy to tap this order block and then go up. So if it was to be a bullish week, it'd be very easy to, you know, use FOMC to sell down, either CPI or FMC. Use CPI to sell down, FOMC to buy up, or use FOMC CPI to sell up, FOMC to sell down. Right? It's a very interesting spot for price to be. Just thinking out loud right now. Price is here. The weekly low is there. The weekly high is here. So I'm not going to mark this on the week because this is going to be our weekly high. So I'm not going to mark that. Let's go ahead and mark the weekly low and high. The weekly low is last week's low. Box top weekly. Box bottom weekly. It's weekly low. And I'm using last week's low and last week's high for our weekly box, because that's the closest weekly high and low to price right now. Last week we're in between last week's high and low range, so that's why I'm picking that low and high, right? I could have left it on week before last high, because we broke out the bottom of the box. I could have left it up there, but on my weekly box, once we break out the bottom, right? If we break out the bottom and we close near the low, I just move the high to that week. Same way, if we break out the top and we close near the high, I just bring the low up to that same week. I don't trail the box on the weekly. Now I trail the box on the monthly, but I don't trail the box. I trail the box on the weekly, but I don't trail it on the monthly, right? Because it's a larger time frame, and you know what I'm saying, the algos ain't gonna adjust that box that quick. That's just my experience with it. All right, let's go down to the daily. Go down to the daily and see if anything we want to mark on the daily. I can close this now since we on the daily, because we're not gonna go that far back on the daily. Again, we're using the March delivery contract to mark everything, because the trading view don't adjust the price on the previous candles, and it make these candles tell a different story. Okay. And he's in a little bit. What is next Friday? The 16th. Okay. All right. So daily. We again, we got these relative equal lows right here that we set. Like I was saying before, all the people that trade the mannequin body parts, you know what I'm saying? I don't know if this qualifies as a double bottom. We went up, came back down, touched that area of support, went up again, came back down, touched that area of support. I don't know if that qualifies a double bottom, but if it do, and the market is truly bearish at this time, a measured move from that double bottom would be all the way down to 37.49, just say 37.50. A measured move from this double bottom, if that is a double bottom and the market is truly bearish, right? A measured move can be down to that. Not meaning we're gonna go there this week, or not meaning we're gonna go, but if the market is still bearish, you could expect the move all the way down to at least 37.50 on the ES, because that's, you know what I'm saying, that's a measured move of that double bottom thing. So if it's bearish, right? On the daily, we filled this daily fair value gap on Friday, had a nice reaction off of it, right? So we pushed up, filled that daily fair value gap, had a nice reaction off of there, but I'm not gonna mark because we filled it in and traded back down through it. So we pretty much got the wax on, wax off in that daily candle right there. We got the whole wax on, wax off. We poked above the actual fair value gap, then traded back down through it. So that's pretty much the wax on, wax off for that whole area, right? Because we went in, waxed on, we traded both ways this way, right? We traded up both ways, then we opened up there, went all the way up both ways and came down. So we done pretty much rebalanced that whole little fair value gap right there. We got a really big order block right here on the daily, right? I'm not going to mark it, but I will point out the mean threshold of the body up this order block right here. 455 even. 455. Is that 455? Does that say 455? 4055? I said 455. 4065. Is that? Man, I need my glasses. Yeah, 4055. So 4055 is the mean threshold of this order block right here, which is I don't have a template for that. So I'll go there. Put that in there. Man, so that's as small as I can go. Okay. That's way too. All right. So right there at the high of that counter, that's the mean. No, I didn't. That ain't right because I didn't change it. I supposed to be 4055. Now, right there, that's the mean threshold of that big order block right there. We got this breaker right here that we right around. The bodies of these candles are still respecting this breaker. We traded up through it. Filled in this fair value gap. So I ain't even worried about that breaker no more because we traded, even though the bodies are still respecting it, right? We wicked up above it, came back down, and then wicked above it again, filled in that fair value gap and sold off. That's done. That breaker done to me right there. So I'm not gonna mark out that breaker is done. And yeah, I don't want to mark anything on the daily besides the high and the low. That's it. The high and the low. That's the only thing I want to mark on the daily. Daily box bottom. Daily box top. Okay. All right. Let's drop down to 4 hour and look at how the 4 hour look, and then we'll start seeing what we want to see going into a next week. What we want to see. We got some confluence here or nested PD arrays, as ICT call them, nested PD arrays. For anybody, I understand nested because I use Premiere Pro and stuff, and when you put an action inside another action, or you put something inside something, that means they say you nesting it so you control the whole thing, right? So what the nested PD arrays are, we got a 4-hour daily. We got a 4-hour fair value gap right here, right? And it's inside this weekly order block right there. So that's a nested PD array. You have a lower time frame PD array that's nested inside a higher time frame PD array. So when you looking at this fit, like if you're a fair value gap trader and you be like, okay, I'm trading off of this 4-hour fair value gap, it strengthens the probability of this fair value gap doing its job and price bouncing off of it because it's nested inside a higher time frame order block. You know what I'm saying? It's a higher time frame PD array that this lower time frame is nested inside. So it heightens the probability of price reacting off of this fair value gap. It's a huge fair value gap. So where price going to react? The first place I would look would be mean threshold of the higher time frame, since it's so big. But it's up to you to figure out how you're going to trade, you know what I'm saying, your book. But just wanted to point that out. So we got a nested 4-hour fair value gap in there. We also have a 4-hour mitigation block. Right. Well, actually, that's a breaker because we broke this low right here. Right. If you look at it from the high all the way down to that low, you know what I'm saying, when you would have a mitigation block in there. But if you look at it, we had a swing low right here. We had a swing low right there. So we actually broke two different lows. So that's actually, you got a breaker right over there. You got a teeny tiny little breaker right there at the breaking market structure. And you got, you know what I'm saying, if you count the beefier candle there, it's pretty much the same spot. And it all comes like pretty much right in line with the mean threshold of that order block. Right. So that's when I was like, I'll start with the mean threshold of the higher time frame. And then now you got more nested PD arrays. You got a breaker and pretty much around the mean threshold of that fair value gap. So that's kind of stuff you want to look at when you're trying to decide, how do I want to trade this fair value gap? And you will be coming into like a discount market because it's breaking the sell side liquidity of last week. So you're going into a deep discount. You're already in a discount, right? But you're going into a deep discount based off of last week, right? Because this is the bottom of the range. This is the bottom of the range. So anything below equilibrium of the range is a discount. So when you bust out the box, you're in a super deep discount and you're running sell side liquidity, and you're either going to run sell side and then go back up to some type of buy side, you know what I'm saying, above this high, or you're going to run sell side. And if you're super bearish, right, run sell side, get the fake, you know what I'm saying, get the cause people that's looking at this double bottom and trying to buy it off the double bottom get sucked into that, run the buy side and get stuck in here, because now when you run this buy side and you start coming back up, you're gonna run into a breaker over here. Now you're stuck, right? You come in, you run the sell side. You know what I'm saying? And then once you run the sell side, you're going to be coming back up, and now you're going to be stuck with a break, because this low right here broke this high over here, and we sold through it, and now you're getting stuck at a breaker. See what I'm saying? You went through, you sold through, and you say, oh, okay, I'm buying here because this is going to support it. And guess what? When it get back there, you get trapped. Right? So now you tried to buy it there, right? And whoop, guess what? You got stuck at this breaker right here. Turn around, hit that breaker, and sell off on you, right? So just watch out for that too. Now, I'm getting real chatty today. I'll probably be looking for what I want to mark out on the 4-hour. We came back down to this 4-hour order block, had a nice reaction off of it, right? And then traded back down and with normal price action and came right back to the order block, right? So we came right back to the order block on the 4 hour right here. The algos pushed us down and stopped at the order block, right? Bounced back up, and then with regular trading, we came all the way back down to that same order block, right? Showing that, hey, that's where price truly wanted to go to. Price truly wanted to go to this order block. What will price do now that we hit that order block? I don't know, Raggy. Wait for price to show us. But that's where price truly wanted to come to, because this news wick just tipped the algo's hand, right? That don't always, like, it don't always mean we're going to go back down there or go back up there. Sometimes the news wick can just be a stop run just so it can go the other way, right? It can be a stop run to go the other way. But in this instance, that's exactly where price wanted to go, because we came right back down to that same order block. We have a teeny tiny order block right here on the 4 hour that I'll mark out right there. We got a small, when the bodies be real little like that, I don't really like, you know what I'm saying, mark them like that, but technically it is, so I will mark it. Technically it is a 4 hour order block, so I will mark it. And that's going to be a bearish order block on the 4 hour. Nothing else that I want to mark, because we came back to the order block already. Yeah. Oh, and this is what I was talking about before, for anybody who don't remember, when I said that breakers start out as order blocks. Breakers and mitigation blocks start out as order blocks, right? But every order block will not turn into a breaker or a mitigation block. You know what I'm saying? But like this right here, like this order block right there, because we came down to an area of support. Then we had heavy distribution off, boom, giving us our order block right there, right? So if we come up, you know what I'm saying, we broke through the high, right? We broke through the high. Now, if we trade back down through this, right, now that will become a breaker. It started as an order block. We trade back down through it. Now it'll be a breaker, right? So, and then over here, in this case right here, technically, I guess if you just counted the lows and highs of each candle, then technically this could potentially be like a breaker or a mitigation block. If you counted the lows and highs of every candle, like say this low failed to break that high, and then you trade it back down through it, and now that's a mitigation block. But that's reaching for straws with me. So I would just rather go find a mitigation block on a lower time frame than to try to use the low and high of the same candle, saying this low didn't break this high on the next candle, and then now you trade back down through it, and that's a mitigate. I don't get that's like that's too much for me. I just like to look at the overall price action to pick out my breakers and mitigation blocks. So that's why I say every order block won't become a breaker or mitigation block, but every breaker and every mitigation block starts out as an order block. Now, man, I'm chatty today. I'm just running my mouth. I usually don't go down to the 60-minute on the weekend chart prep, but I'm just going to peek at it real quick to see what's going on. See what's going on real quick. Okay, we're coming down. We got an order block right there. Got an order block right there. Yeah, it's a very interesting place for price to be. Very interesting place, because we got an order block here on the hourly. We can very well take out this sell side, hit that order block, and still respect this this sell side and start to push up because we're in a deep discount on the weekly and the daily. So we very well could take out this sell side, hit that order block, and push up. See how this plays out, man. We'll worry about that once the price start trading overnight, and we look at what I like to use Monday to let the market tell me what it want to do. Now, let's go back up to the daily and look at what we got a going zone and see if we can figure out what we want the market to do over this week. Before we start doing that, let me go see if y'all saying anything in the chat. Open up the chat. Y'all ain't saying nothing. What's up, Chief Motivation? Yep. I had to think about how you spell chef for a minute. What's up, Chief Motivation? Nothing in the chat. Ain't nobody saying nothing in the chat. Okay, let's go ahead and see what we can. Man, we've been on here for 56 minutes. Golly. Let's go ahead and see what we can see what we want to go as on. All right. Looking at where price is, right? Okay, I'm gonna say what I want, and then I'm gonna say looking at what price is first. Okay, so what Lil Timmy Rogers would like to see price action do, and what I think would be very healthy for price action based off the seasonality of price historically. Shout out my financial advisor Dustin, where he mapped out the December price action over the past 40 years and show how in the beginning of the month it'll go up, pull off, and then in for the first 2 weeks it'll go up, pull down, and then for the last 2 weeks take off for the Santa rally, and it starts like right around mid-month. It'd be right around mid-month when it hit that middle of the month dip and then take off for the Santa rally. So for historical seasonality and healthy price action, right? I would love to see us this week get down and fill in this daily fair value gap right here that's inside this weekly order block, right? That's inside this weekly order block, bringing us back down to this daily mitigation block right here. That will be healthy price action for us to get back down to there this week. I don't care if we come down there and bounce off of it. I don't care if we come down there and stay down there, but I would love to see price get down to this nested mitigation block, this nested daily mitigation block right here, right? I'm gonna go ahead and mark it and leave it there. Do I got a template? Mitigation block? Yes. Bullish. Right there. I would love to see price get down to that daily mitigation block right there. That'll put us at this mitigation block right there. That'll put us at this order block. The order block can do its job, get down to it, and block price and push it back up afterwards. You know what I'm saying? That'll be a good way to come down here and start your Santa rally. You know what I'm saying? That'll be healthy for price action. That'll be in line with December seasonality. That's what Lil Timmy Rogers would like to see based off the PD arrays where we are now, right? Based off the PD arrays that's going on around price. We've come down and we consolidated. Everybody know whenever we getting in front of CPI, PPI, FOMC, what we've been saying on here forever. The market makes a move, then it slides to the right in front of FOMC. So what do? We made a move, and now we're sliding to the right. We got PPI, we got CPI on Tuesday, FOMC on Wednesday. So since we got CPI on Tuesday, I don't expect a whole lot to go on in front of CPI, right? Since we got FOMC on Wednesday, the algo is going to react the way they want to react to CPI, right? If we get a good CPI, right, I can see the algos taking off, maybe hitting this high you know what I'm saying, get into the weekly equilibrium, which we didn't mark. 46, 25, 75. Man, did I put that right in the, oh no. I forget, did I put that right in the right spot? I was 1 point off. I was 1 point off. And that's right there next to that daily high. Equilibrium. All right. And then the daily equilibrium. It took me forever to do that. I'm sorry, y'all. It took me forever to mark that. Daily equilibrium 39.92. Copied everything. $39.92 even. God dog it. Come on, man. One tick off on that one. No calibrated out, trying to act right. That's right there at that order block on the daily. The order block that we had marked out. Oh no, was that a yeah, that was 4-hour order block. Yeah. That 4-hour order block that we marked out is right there at the daily equilibrium. Yep, that 4-hour order block is right there at the daily equilibrium. All right, so now what I was saying. Monday, I don't expect much of nothing. Tuesday, we got CPI, right? If the CPI numbers come out the way the I shouldn't say good. If the CPI numbers come out the way the algos want to see, I could see us going up, maybe hitting the daily equilibrium, maybe even getting up and hitting the weekly equilibrium, taking out these highs, right? Going back up, revisiting this week, just have a reaction to get up there. If we don't get up there on Monday, right? If the algos don't like the news, right? I can see us taking off and taking out the low of the week. If the algos don't like the news on CPI, right? But either way it go, whichever way the algos react, I can see price trying to hang out near equilibrium somewhere. Either this daily equilibrium or this weekly equilibrium. Hanging out around one of these equilibriums after that CPI news come out, because we got FOMC the very next day. So I can see price trying to hang out at fair value, waiting for the FOMC numbers. So Monday, I can expect price to try to get close to this daily equilibrium and wait on CPI on Tuesday. On Tuesday, after Tuesday CPI, make whatever reaction you're going to make and try to get close to some kind of fair value, the weekly fair value, daily fair value, whatever fair value the algo's going to hang out around until the FOMC numbers come out. Then once the FOMC numbers come out, then get your reaction. Either down, breaking. I would love to see us have a bearish week to come down into this area here, right? So we can very well use the CPI or the FOMC. We can use the CPI to move up first, get to the equilibrium on the weekly, take out the buy side there, and then use FOMC to take us down to this area that would be healthy for price action, right? Now, based off what the price is saying right now, right? We came down, we got a break in market structure to the downside on the daily, right? Got an actual closure, of that, right? Below that low. So that's the market saying, I want to go down there now, right? The market saying we want to go down there now. So we got a break in market structure with a fair value gap. So breaking market structure to the downside, fair value gap, retrace. We retrace back into that fair value gap, right? What the price action is saying is we broke structure to the downside. We closed below it. I want to go that way now. And now we have retraced back into this fair value gap, right? That's what price action is saying on the daily. So now it's saying we've retraced back into this fair value gap. That's the sell, right? Once I sell there, I'm going to at least come take out this sell side liquidity right here. That's your low hanging fruit, right? This mitigation block down there, that can be another target below this low. That can be another target. That can be the ultimate target down there below this low over here. These equal lows and then that low. That's what the price action is saying at this time. News trumps charts. The news can agree with price action. The news can disagree with price action. But that's what the price action is saying. Breaking market structure to the downside, fair value gap retracement, sell down. I yield my time. That's all I got. Let me see what y'all talk about in the chat. Daily plus fair value gap in the weekly order block. Yeah. And it's hot too. We already said that. I'm just messing with you. That 4-hour fair value gap is a liquidity void, right? Which one? Let's go back to 4 hours. Talk about right here. If you talk about right here, yes, that's a liquidity void, right? We went from here all the way up to here, and we only offered buy side liquidity. So this is a liquidity void right there. And then it's still, the liquidity void is still open. The only part that still needs to be serviced is below this low right here. So the active part of this 4-hour liquidity void is still from this candle's high, right? The 2 o'clock candle on November 10th up to the 6 o'clock candle on November the 17th. That's still the active portion of this liquidity void. And then inside that liquidity void, you got a 4-hour fair value gap right there. You would be correct, Chris. On the 10th. Okay. I think we just looked at the same thing. Tim, can you screenshot this and put a copy in the Discord? On my screen blurry. Screenshot which part of it? What part of it, Robinson? Talk about for the daily. Talk about this right here. Screenshot this. That's making it too scrunched up. Like this right here. Screenshot that. I don't take you that long to type now. Screenshot this part right here. Is this what you're talking about? Yep. That right there. Okay. Let's do it like this right here. Let's do it like this right here. Do it like this right here. Here. Do it like this right here. Here. Get out of the way. Get out of the way. Get out of the way. I'll print screen. Do it like that right here. Here. Do it like that right here. Here. What is my computer doing? Do it like that right here. Do it like that right here. For my best, my BFF. H.B.R. Robertson. That's close enough. That's close enough for government work. For my best friend, Robert. Is that how you spell Robinson? Robinson. Okay. Robinson. Save. Oh, the river start to shake. I do a double take. Did you get it yet? Get it yet? Get it yet? Ooh, my secret. Oh. Hey. I ain't got no delay seeing my messages. I ain't got no delay seeing my messages. You got delay. I missed it. You ain't missed nothing. You ain't missed nothing. The trader. For my BFF Robinson. Heart emoji. Do Pepe got a heart emoji? Pepe ain't got no heart emoji. There you go, right there. Bust him with the hit him with the Draco, Pepe. Hit him with the Draco, Pepe. There you go. That's an AK for anybody who don't know. Had AKs in the crib before they made the Draco. That's what Lil Baby said. Hey, what's up? What's up, Fishbone the Great? I'm still sitting in calls and puts. Y'all making daily money. Hey man, I'm a swing trader. I don't be making no daily money. I barely make day. Oh, shout out to everybody who wasn't on the how we best friends. You don't know how to spell my name. That's Cap. Hey, shout out to everybody who was on the live yesterday. But for anybody who wasn't on the live, I just want to drop the one thing, the one thing that God dog it. Come here. I just want to I want to drop this off for anybody who wasn't on the live yesterday. When we went back and looked at the price action, right? We let me come here. Right? We looked at the price action, right? You put it on the hourly candles, right? I'm gonna see if anybody pick up on it. We're gonna see if anybody pick up on it. Did you get it yet? Get it yet? Get it yet? Oh, my secret. The beginning of the week, the 5th, right? I'm giving a vertical line. Don't, if you was on live yesterday, don't be trying to say it and act like, oh yeah, I see it. Okay, so Monday, right? I'm gonna put it at Monday at 12 o'clock. Put a line there, right? I'm gonna put a line there for Monday at 12 o'clock. Darken it up. We're gonna make it a 2. Make sure y'all can see it good, right? And then we're gonna put another line over here on Friday. On Friday's close, right? On Friday's close. Matter of fact, I'm gonna put it one thing over so you can actually see the candles, right? So this is Monday's opening candle right here, and this is Friday's closing candle, right? Okay, so right there. Who we at? Trying to see if I can find it. We just found it yesterday. I just looked at it yesterday. Why I don't see it now? Oh, that's probably why. Okay, let's go here and see if it look different on here. Get on the other one. Monday. Okay, there you go. All right, I see it on there on the new contract. See, they different. On the continuous contract, it looked different. So we got to do it on the new contract. Right? Delete that. That's what I say. It's telling different stories. Now let's go back to the new contract so we can get the story together. The calendars telling different stories. Hide this. Hide that. Now we're gonna go back to Monday, vertical line. Monday, Friday. Right? Now, looking at the price action over the whole week, right? Over the whole week, what do y'all see? I thought about it because somebody said making the Discord was only for 100 people to get in. Ain't nothing special about the Discord. I made the Discord so that I can just get a thought out real quick because I ain't on no other social media. So I opened up a Discord. And I said, I'm only going to let 100 people in. I don't put out nothing in there that I don't share on here. Anything that I say in the Discord, it's like when I got a thought at that moment and I got to get it out. And then when I get on live, I'll come back and I say the exact same thing that I said in the Discord. I don't want nobody to feel like, oh, people getting special privileges, because it ain't no special privileges. I ain't on no other social media. I used to use my Instagram to reach out to people, but I ain't on no other social media. So that's the way that I can get stuff out quick. I get an idea out. Sometimes I'll be up 2 o'clock in the morning and I'll drop an idea in the Discord just so I can come back and remember to talk about it on the live. So, yeah, I don't want nobody to feel left out. And I said I wasn't going to open it back up, and I'm a man of my word. I ain't that person that be like, oh, we got 100 more slots opened up. No, we don't. No, we don't, because I ain't trying to run no Discord. Okay. When you're on the continuous chart, click. Oh, really? Click B, adjust on the bottom left. Oh, really? Continuous. Get out the way. And you said click what on the bottom left? You said click B, adjust. Oh, right here. That's the bottom right. Right here. Look at that. Look at that. So, what? Look, who is that? Chris? Chris? Man, Chris, you are the man, I hope. Are you a male, Chris? I know, Chris, that be females too. But if you the man, if you're not a man, you the woman. Chris, I appreciate that. I did not know that. I did not know that. What does that mean? Adjust for contract change. Look at God. Look at God. Bringing Chris through when I needed Chris to come through. Because now it's there. I can see it on this contract now. See, before it wasn't there. I can see it on this contract now. But there ain't nobody put no guess in the chat. Ain't nobody see it. Now, when ICT say what you see, everybody named mama want to start commenting. I see this. I see that. I see this. I see that. Everybody want to start commenting. But when Lil Timmy Rogers say what you see, don't nobody see nothing. Anyway, speaking about, he was talking about daily money. You know what I'm saying? I ain't getting no daily money. If you're patient, and I just saw this. I usually don't even look for stuff like this right here over the entire week. But I will be looking for stuff like this over the entire week now. Every single day when I get ready to start trading, I'm going to look back over the entire week, over all my PD arrays over the entire week, which I usually do. But for some reason, it just be eluding me like how spot on these algos are. And for anybody who wasn't on the live, right? So we started out this Monday night at Monday morning at 12 o'clock, right? We trading down, right? Consolidated there for a little bit. And when we this heavy distribution down right here, right? That gave us what right there? What is that? Everybody say it with me. Once we traded down past that low right there, that gave us what? Somebody put it in the chat. Use the abbreviations. What is that right there? Once we trade down past this low right there, what did that give us? That more than 15 seconds right there. That was more than breaking market structure, Michelle Tucker. I appreciate you. That gave us a breaking market structure, right? So we came down to an area of support, aka liquidity, right? We was in the liquidity pool. We were swimming in the liquidity pool, gave us a breaking market structure to the downside, right? On the very next candle. What did it give us on the very next candle? Tim putting in overtime. That ain't what it gave us. What did it give us? Appreciate you, Michelle. Appreciate you, Pamela. Fair value gap. Look at Michelle Tucker. It gave us a fair value gap, right? A bearish fair value gap. I'm just going to pick one. I know they say 4 hour, but it's an hourly, right? Gave us a fair value gap. So we had a breaking market structure. The very next candle gave us a fair value gap. And then what did it do? It traded all week long. Then we came back right before the news and hit what? That fair value gap and did what? Sold off for a nice 60 point move, all on the, what do we call that? What is that trade setup? What is the name that Lil Timmy Rogers gave this trade setup? When we get in the liquidity pool, we have a breaking market structure, either to the bottom or the upside. On the very next candle, we make a fair value gap, and then we wait for price to trade back up to it or back down to it. What does Lil Timmy Rogers call that? What does Lil Timmy Rogers call that? What does he call that? Someone in the chat. Michelle, liquidity run reversal. Sanjay, out there all day. Sanjay, out there all day. Took an entire week for this trade to play out. But it was at least 60. Let's see. If we went mean threshold, mean threshold of this fair value gap, let's see what that was. Sell. I want to sell. No, right here. Sell. Short position. Come mean threshold. What's the that's pretty much mean threshold right there. We're just gonna go to the closure of that candle. Mean threshold. We're gonna give the stop to the top of the fair value gap, right? Because that's above the high. If we want to get frisky, we could really go like to the high, but we're gonna give it to the top of the fair value gap, and we're gonna go down. God dog it. We're gonna go down. Okay. Click over there. Why did it just click? Why didn't it click that time? We're going to go down to the closure of that candle right there. We're going to go to the closure of the daily candle. We're not going to go all the way to the low because we ain't going to pretend like, hey, we got out on the low. So we're going to go down to the closure of the daily candle. Look at that right there. That is a 6.76 to 1 trade. 6.76 to 1 trade off of that liquidity run reversal that took a whole week to play out, right? A whole week to play out. And that is, you went from, what's the entry price? I don't know how to read it on these right here. Oh, there it is right there on the side, I think. Is that it on the side? I don't know how to read it on these. I don't know how to read it on TradingView. Like where's the entry and exit? Okay, there you go right there. So 40, 20, 25, right? And then the profit was 39, 64, 50. What that is? Nope, that's the wrong thing. 40, 20, 25 minus 39, 64, 50. 55, 56 points. 56 points right there on that trade. And then it actually did go down like 60 points. Oh, see, it popped over that time. But yeah, there it go right there. And that's a nice little chunk of change for one trade, right? For one trade. Now, let's see what that is. Let's say 56 points. 56 points. If you was on the MES times 5, that's $280, right? And you was risking, I'll tell you the stop loss, 33 ticks. What's 33 ticks? 4 points, right? 4 points. You was risking 4 points. You was risking 4 points and got 56, right? So 4 points. So you was risking 4 points. That's what? 4 times 5, 20, right? You was risking 4 points and got $220 and got $280, right? And if you was on the big boy, you was risking $200 and got $2,000. I mean, and got $2,800 for the big boy. Because the big boy is 50 times 56, 2,800, and then 50 times 4, 200. So you was risking 200 and got 2,800, and on the MES you was risking 20 and got $280. All off of one trade, just sitting down being patient. Just sitting down being patient. And that's why I was saying when we'll talk about what day that was, we'll talk about the chart with the percentages. The percentages. If you just be with, I was like, with futures and options, it's easy to hit them percentages if you discipline and if you patient, right? So imagine sitting down every day and listen to people talk about the money they made this day, the money they made that day. You know what I'm saying? And then coming over here, they probably risked money in here, lost some money because they had did such a good job on this day, did such a good job on this day. Then they came over here and got greedy and gave a lot of it back. Then they came over here and made a little bit of money this day, or maybe they didn't, or maybe they got scared and said, forget it, I ain't gonna mess with it no more. And then you sat here and you was real patient and didn't do anything until this day, and it came back to your setup and you got that move right there. Risk 20 and made 280, or risk 200 and made 2,800. You was real patient and took that trade right there when it came to your setup. It gave you your fair value gap. You just sitting there watching it, right? You want to sell. You want to sell. You just watching this right here, right? You just watching it. You're looking at it from here. This your fair value gap. This is the highest high, right, that you're looking at. You're looking at that high. This is the lowest low. You're looking at that high. You're looking at that low. You want to sell. PIM-dash chart. Let's pull up PIM-dash. Let's pull up PIM-dash, right? This kind of stuff you want to go back and do to start like ICT say you want to train your eye to see this stuff. You want to go back and look at the price action and pretend that you called the move right. Pretend that you called the direction right, and then go in, mark up the charts, and look for the PD arrays and see how price reacted to those PD arrays. Where's my freaking PEMDAS chart, man? See how price reacted to those PD arrays. There it is right there. Okay, let's pull up PEMDAS. Right? Hot dog it. Okay. It's a fair value gap. We're dealing with a fair value gap. We got the breaking market structure. We got the liquidity run reversal, right? We traded down, got it. We splashed in the liquidity pool. We jumped off the diving board, right? Right? We bounced on the diving board. Bring, jumped in the liquidity pool. Splash. Here go your liquidity pool right here. That's the low, right? We bounced off the diving board. Burker, burker, burker. Splashed into the liquidity pool right here, right? We splashed in. We swimming in the liquidity pool. Set a high, set a low, set a high, set a low. Then we got heavy distribution. Pow! Breaking market structure to the downside, right? Let me mark this so I can get this off the chart, right? That's our range equilibrium right there. Close enough for government work. I ain't gonna try to mark it out. Range equilibrium. I like it when it's black. Did y'all just hear that? All right, so splashed into the liquidity pool, swimming in the liquidity pool, heavy distribution, breaking market structure to the downside. Very next candle, set a fair value gap. Boom, you got your setup for your liquidity run reversal, right? The market comes down, right? Sets a low, sets a new low, right? This is the range you're looking at right here. So when the market came down and set that low, you ran your fibs from the high above your fair value gap to the low below your fair value gap. That's equilibrium. You want to sell, right? You want to sell off of this fair value gap. This fair value gap is in the premium. That's a plus for you. You want to sell. You're bearish. You're trying to sell off this fair value gap. It's in the premium. That's a plus for you, right? So it's in the discount. You're getting frustrated. You hear your homeboys and homegirls talk about they making money. It start coming back up. You get excited. You're in the premium, right? You see this fair value gap right there, right? It's a fair value gap on the bottom. What Lil Timmy Rogers always say, if it's two fair value gaps stacked on top of each other, I don't try to enter off the bottom one. I wait till it comes to the top. Sometimes it don't come get you. Right here, Lil Timmy Rogers' heart is broken. Why? Because it came up to this bottom fair value gap and it took off. Left. Oh my God, it just got left. Yes, you did get left, but you're not chasing it. You're not chasing it. You're disciplined. You're staying disciplined, right? It's consolidating that equilibrium, right? It comes up, come right here. You trust the process and you fire. Boom, you fire. You put your stop loss above the fair value gap or above this swing high, whatever your risk tolerance is, right? It start going your way. You're happy, right? Yay, I'm got to do it. It turns around. Now you're panicking now. You want to get out of it. You want to get out of it. You got a stop loss right there for it to do its job. You're getting scared. Why are you getting scared? Because you're trading something you shouldn't be trading. If you was trading something you can be trading right there where you put that, wherever you put that stop, you're willing to lose that amount of money. But if you start getting scared when it start going towards your stop loss, you're risking too much or you're not ready to be trading live, right? So it push up, your butt cheeks pucker, right? If you got the capital, or if this is your trading style, you can use that opportunity to add to it. Why? Because you trust the process. And the first time you went into this right here, you didn't go on with your full amount because you hit it right there at the beginning of the fair value gap. So you didn't put on your full amount, right? Lil Timmy Rogers, he's sitting up here waiting at the equilibrium of the fair value gap because he don't get it on the first touch. He get it at the equilibrium, right? So boom, you got picked up there, right? Your butt cheeks tight because it's, you know, you going in the red a little bit, but you cool, you disciplined. You put on your whole amount there, so you ain't got nothing else to scale in at this point right here, right? So you just sitting there chilling. Lil Timmy Rogers got in right there because that's where he weighed at. He weighed at equilibrium, the mean threshold of the fair value gap, right? Now Lil Timmy Rogers take a little bit of heat with you, just a tad bit of heat, but he ain't worried about it. He disciplined. He trusts the process, right? Then all of a sudden the news come out, pow! Everybody happy. Why? Because they had a profit target right here below. If you had more than one contract, you might have scaled that some here, low-hanging fruit at equilibrium. You might have scaled that some here, low-hanging fruit there. You know what I'm saying? You probably took some right there, and then your ultimate target probably would have been down there, but you ran out of time, and you went on ahead and closed out the rest of your position right there. But took a whole week to take one trade, and that one trade paid you off. Paid you off. What you say? Anybody using TOS knows if they have fib risk to reward templates. Anybody know that? I don't use Thinkorswim. I got Thinkorswim, but I don't use it. Okay, so this for future contracts, not called. You can do the same thing, but you just won't be able to buy your position. You'll only be able to buy your. That's what I do. I use this exact same, like right here, how we looking at this chart. I look at the ES to buy my puts and calls for the SPY and the SPX. But the disadvantage to that is you can only buy the puts and calls during like from 9:30 to 4:15, right? From 9:30 to 4:15 for the SPY. You can buy calls and puts, buy and sell calls and puts from 9:30 to 4:15, right? Outside of that window, you won't be able, but this is exactly what I do. I watch the ES, I mark up the ES, and whenever, no matter what the price is on the SPY or the SPX, when the ES gets to this fair value gap at my level that I want, I buy. Or, you know what I'm saying? When it gets to my target down here, I sell. Like what I don't look at the price on the SPY. I just look at the premium that I'm paying for when it gets to this point on the ES, right? I don't care what the price is on the SPY because they move tick for tick, right? I'm just looking at my targets on the ES. How do you pull up the risk reward on TOS? Oh, that's the same question. That's the same question. Somebody was asking, but Sanjay and RM. Anybody know that for Sanjay and RM? I am tardy for the party. Hey, Spot. Hey, what's up, Margot? What's going on, Margot? Breaker, equilibrium zone. I don't know what this is for, but okay, yeah. Must be talking futures cause can't trade options that early. At least not. Yeah. That's a futures trade. That was a futures trade right there. That was a futures trade. I was talking about futures on that move right there. That was futures. Yep. We've been on here for an hour and 40 minutes. I'm about to call it. I appreciate y'all for hanging out with me this long. Hopefully I said something that was helpful to somebody. God dog it. Come here. Golly, what am I doing? There it is. Okay. Man, that thing drive me crazy just now. I was trying to close that out. Y'all hold on. Let me get all the junk off my screen before I get out of here. Hey, I appreciate Chris for letting me know all I had to do was hit that adjust button on the bottom. I really appreciate that. That came in handy mandy. You feel me? Handy Manny. I mean, who y'all remember Handy Manny? Who had kids by 13, 14, by 50, about 14, 15 years ago. My son used to love to watch Handy Manny. Who had to suffer through y'all be talking about Coco Melon these days. We had to suffer through Handy Manny, the Backyardigans, Max and Ruby. That stuff with Yo Gabba Gabba. We had to suffer through like Yo Gabba Gabba, Handy Manny, Max and Ruby, Franklin the Turtle. That's the y'all be talking about. Y'all got to suffer through Coco Melon. Ain't nothing like your backyard friends, the backyard against. Y'all be crying about Coco Melon. Y'all don't know nothing about the Backyardigans. Hey, I appreciate that. Hey, if this your first time pulling up, Mittul Patel, is that Mittul Patel? If it's your first time pulling up, welcome. If it's not your first time pulling up, I truly jalapies, but I don't remember that name, so I'm saying welcome. That's it. SpongeBob and Dora. Dora. Backpack. I'm the backpack. Hey, Dora was my daughters. Me and my daughters was on Dora. We watched Dora. Me and Calandra know. She know. Me and my daughters was on Dora. Backpack. And Timothy was Backyardigans. Timothy was Max and Ruby. Timothy was Yo Gabba Gabba. Timothy was what else was Timothy? Timothy called Swiper No Swiping. That was with Jaden and Maya. And then Chris ain't get a chance to do nothing because he was like Timothy's little brother. And then by the time Chris got old enough to want to watch TV, Timothy was to the age where he was mimicking what my niece Kiara did. My niece Kiara she an old soul. She used to watch like Hanging with Mr. Cooper, and she be up watching these Nick at Night shows, right? So Timothy wanted to do what Kiara was doing. So now Timothy waking up at 6 o'clock in the morning, watching Hanging with Mr. Cooper and watching all kind of stuff like that. And Christopher want to watch what was the one Knee-High Kylan. Christopher want to watch Knee-High Kylan, but Timothy want to watch this, and then Christopher want to watch the jump around. Well, their names was the jump arounds, but they changed it to what did they change the jump around names to when they switched out the one girl and like act like ain't nobody gonna notice she gone? The golly, I can't think of that. It was like four people. Had like the Hispanic lady, the white lady, the black dude, and the white guy. And then they switched out one of the characters in the middle of the season, like nobody ain't gonna know. Chris wanted to watch them, and Tim like, I want to look at this. I want to look at. So Chris ain't get a chance to watch nothing educational. That's why he ended up watching Breadwinners and all that kind of stuff like that. Appreciate you, bro. Hope you have a great. Hey, I appreciate you, James. I appreciate everybody that tapped in. I appreciate everybody that I'm about ready. Okay, Junior say he about ready, so I'm about to go to the mall and pick up water. I'll see y'all in the morning at 9 o'clock. 9 o'clock for the overnight price. Hexion. Y'all enjoy the rest of your weekend with your family, man. Appreciate for hanging out with me for an hour and 45 minutes. I'll see y'all in the morning, man. Gone.